UK and Norway and many other countries are now telling citizens to leave because of the sense that Vladimir Putin has the pieces in place. Nearly 60% of his combat battalions from all over Russia are surrounding Ukraine. There's the Navy in the Black Sea with amphibious assault ships, and it's time to go, is what countries are telling their citizens. So you do get a sense, amid all the ordinary Friday night good times that people are having, that the subject is not very far from people's minds. It's in their hearts. People are making evacuation plans, checking out routes, and making the decision that they need to. The expats, the Americans and others, should we go? We talked to several Americans previous to tonight. There's no, we're going to stay. But the urgency of this warning, immediately, it could happen any day. And backing it up with claimed intelligence that they say they can't share, that I think is going to get people's attention. You can feel deep down the ground shifting, the shadow of war lengthening over this city and this country.
Yeah, Terry, amazing.
This guy
You're there.
knows how to
Obviously,
speak.
Be safe. We did hear the urgency from Jake Sullivan. Basically, you have 24 to 48 hours if you're an American citizen, and essentially this idea that there is no guarantee that the U.S. would be able to help people get out later. Mick, I want to pick up on that point.
We're going
That's
long
just
LMT
alluded
right
to
here.
us. And then also this
Long
idea of
Lockheed
false
Martin.
flag. We heard Jake Sullivan speak about this again, that it is possible, and I know we've talked about numerous possibilities, but it is possible that Russia somehow responds, quote unquote, to a false flag. How does that fit into how you see these developments?
So first of all, Deidre, it is very alarming to see and hear these reports of this compressed timeline where we could see an actual invasion within 48 hours. I think it is exceptionally important to tell Americans that they need to start thinking about getting out now, if not leaving. This invasion would likely be started with cyber attacks, electronic warfare.
They do cyber attacks all the time, though.
Communications, then airstrikes, very robust airstrikes, and then artillery. And there's some discussions about how close some of these major metropolitan areas are in the border. For example, in Belarus, about 250 miles to get to Kyiv. So once this starts, it's going to be very difficult for people to get out. And as the White House just said, they're not going to send troops in. So that is something that I think we need to amplify. To the point of your question, I don't think that the White House would be saying this potential false flag.
No, I think what he's describing would be using the Russian proxies in that part of Ukraine, eastern Ukraine, where the Russians are in general in control, and they have a lot of proxy elements there. So making some kind of attack against Russia using those proxy elements would give them reason to actually conduct an attack.
To then initiate, claiming that it was not theirs to initiate.
Speaking of deflation, Elizabeth, I want to bring you in on this because we heard Jake Sullivan said the West is united, and whatever Putin does with Russia is going to set up an enormous amount of tension with China. He spoke about the collective GDP of those two countries, the GDP of the U.S. You follow the global economy very closely. How do you think this is factoring into the calculations all around?
Well, Deirdre, this is a really important point because we've seen this strengthening of the relationship publicly between Russia and China. At the Olympics, they made a point of saying that they are united, specifically on the economic front, as we are seeing these threats from the U.S. and NATO allies of severe sanctions, economic penalties, export controls. There is a concern that China could kind of step in and fill some of that gap, strengthening
I wonder if Russia does start
Sullivan
fighting
said was
and
important
we
here.
start
He said that
sanctioning,
ultimately he
I wonder
does
if
not
Russia's going to
believe
have a lot of
that Russia and China can make
cards in
up
their
for the
hands
gap
when it
with the
comes
rest of
to
those sanctions
preventing
other
energy from
European
reaching
countries
Europe.
and
Because
the
they're a
US
huge
win.
exporter of natural
Ultimately,
gas,
there's just too much pull
all
from those
all kinds of other
key
fossil
economies
fuels.
to have enough of an impact that
If
China
they
will
stop
really
sending
kind
it
of
to
double
Europe,
down
it's
here
going to be
and
real
only
trouble.
really go on the side of Russia. But ultimately, that's of course the message they're trying to send from the economic perspective, that the U.S. and NATO are prepared to institute these types of penalties that would be so crippling, which really we didn't see in the past in 2014 with the situation in Crimea. They're trying to say that this time it's going to be even more, that Russia does not want to see what these types of penalties could do to its own economy.
Yeah, Elizabeth, that's a great point. I heard Jake Sullivan say that as well, meaning, they're not going to be able to, China cannot make up in theory, at least the economic punishments that Russia will face from a united West. Terry, when you're there and when you're speaking with people, do most of your sources there, do they feel more aligned with the West or with Russia?
There's no question that the people in this part of Ukraine...
I mean, there's a lot of speculation about why Russia would do this, but I'm seeing what some of you guys are saying in the comments section. One of the primary reasons that Russia likes to interfere on its border is because it likes having this strip of neutral countries between itself and with the NATO countries. Now, Ukraine has been throwing around the idea of joining NATO for a long time, but if you have an internal territorial dispute, you cannot join the NATO alliance. You will not be allowed in. The rest of the countries won't let you become part of the alliance. So by taking a piece of Ukraine out, Russia forces Ukraine to either abandon the idea of joining NATO or forces them to formally cede territory to Russia, which gives them a nice little buffer zone. So either way, Russia takes a win. Now, the way Russia loses is if they attack Ukraine and then Finland immediately says, we're joining NATO right now, like no questions asked. They're doing everything they need to do to get in as quick as possible. Because now they've just picked up, NATO has just picked up another country on Russia's border that would have otherwise been neutral. That's why I think Russia wants to interfere into Ukraine.
Terry, I want to bring Mick back in because our team at the Pentagon has just learned new information that another 3,000 troops are headed to Poland from Fort Bragg over the
And
next
warm
few
water
days.
ports, that's correct too.
Mick, as somebody who's been in numerous rooms for numerous conversations such as these, what does that say to you?
So they could be multi-purpose force. They could be there to assist in the evacuation of U.S. Citizens out of Ukraine. But they could also be there to bolster the whole NATO response force, which may be initiated in the coming days, especially if there's an actual invasion. So this is a good move to get troops out there. Again, and we've talked about this many times, if this invasion happens, the likelihood that it stays contained into Ukraine is very little. It's likely to spill over into NATO countries. We need to be able to bolster our NATO allies, and we need to be able to help our citizens should they decide to leave, which they should.
Yeah, it seems as if that is the case. Terry, I want to go back to you quickly, though, because you began to speak to this idea that Putin is making this big bet, and it seems as if he is making a bet on a fragmented West, or at the very least, a West that cannot coordinate. Today, we know that President Biden convened a call with nearly a dozen European, Canadian leaders to talk about the situation. What are the chances that Putin did not calculate a united West?
Well, he's a person who likes to have options, and I'm sure the ideal option would be that he would have been able to split or weaken resistance in, for example, Germany, which is so dependent on Russian natural gas, and that they would not be able, the NATO allies and other European countries in the West would not have been able to form a front against him. It does look like that has happened. The Biden administration succeeded in doing that. Putin himself, I don't know if you can hear it, but there's a fireworks display going off not far away. So if you hear anything, it's just fireworks for now.
Thanks for the clarification.
But for Putin also, I think the game is worth the candle. He has essentially said that Russia must be great again. That's basically his idea, make Russia great again. He recognizes, I think at this point, there's no question he recognizes the costs that Russia will incur in terms of its reputation around the world, in terms of its economy, in terms of
That was a goofy looking table they're at.
Power. But I think he senses that Russia's greatness lies in an imperial Russia. Without Ukraine, which borders Poland, for example, and is on the Black Sea, Russia is not as large a country, not as powerful, robust a country. It's more Asian, it's more remote, it's more landlocked. And that has always been part of Russian strategy. He's, I think, decided, if he is in fact going to do this, that the consequences that you've outlined are worth it.
Yeah, huge gamble, and I'm so glad you underlined that point. I mean, Russia's reputation, its economy. Elizabeth, we saw the White House Press Secretary Jen Psaki asked if the president will speak to the American people as these tensions ratchet up. Any guidance on when President Biden may address the American public?
No guidance yet, Deirdre. You know, they had made a point of saying there's nothing specific to announce, so we certainly can expect that the president's going to get a lot of questions about this. He's already been getting a lot of questions about this. The White House did say that the president has plans or will be having a conversation with Putin without giving any specifics there. So ultimately, the message they are trying to send is that the diplomatic channels are still open. You know, it was notable that Jake Sullivan, the national security advisor, said that they are not sending the message that Vladimir Putin has definitively given the order to invade. That's contrary to some of the reports out there, essentially saying that the channel for diplomacy remains open if Putin decides to pursue that. Obviously, we have not seen very good progress at all on that front. But
I mean, what she's talking about here, when it comes to Russia putting pressure on Ukraine and looking for political concessions, they've been trying that for so long with cyber attacks, with proxies, carving out little pieces of territory, arming separatist groups and stuff like that, but it really hasn't worked. I mean, Russia was able to take Crimea years ago, but since then, the cyber attacks have done nothing. There has really been no expansion of the proxies. I think Putin is looking for a way to increase the pressure that they're putting on Ukraine because they haven't gotten the political concessions they've been looking for. So now we're, what, 8 years after the Crimea thing? So now is the time. Let's see, what are they talking about here?
As relentless truck convoy protesting vaccine restrictions and mask mandates continue, this is coming.
This is news to me right here.
Ambassador Bridge linking Detroit to Windsor, Ontario, is shut down for the 5th day by a blockade of protesters. Experts worrying, of course, that automakers are losing millions of dollars by the minute. ABC's Elwin Lopez is in Detroit with more. Hi, Elwin.
Deirdre, Ontario has declared a state of emergency. We know that the mayor of Windsor has said that the governor.
Any Canadians in here? I have no context of what they're talking about here.
Yet another day, protesters cutting off access to the Ambassador Bridge linking Windsor, Ontario to Detroit. They're protesting COVID-19 mandates, and we know that the auto industry, according to experts, is losing millions of dollars by the minute. Ford says that they're now exploring other options to ship parts. General Motors says they have canceled several shifts over the past few days. Ford, Honda, and Stellantis have all been impacted in terms of production. And now the U.S. Department of Homeland Security is warning that protests like these could expand into parts of the United States, potentially impacting the Super Bowl over the weekend. But of course,
that's where you cross the line when you mess with the Super Bowl.
On the economy. Deidre?
Elwin Lopez in Detroit. Thank you, Elwin. Now to that focus on the stunning inflation number. Prices are up 7.5% compared to a year ago, rising at the fastest rate in 4 decades. We are seeing prices jump in every area of American life, from filling up the tank to paying for furniture. This weekend, we are also seeing, of course, a Super Bowl. And for most people, that means you're going to spend more at the grocery store. Alexis Christopher is with me now. She is a reporter with Yahoo Finance, breaking it down for us.
This is where you really start crossing the line. If you start messing with the Super Bowl, I mean, this is going to be the least exciting Super Bowl ever. I don't care about either of these teams. But if my wings and my chips go up in price, we have a problem.
Deirdre, I'm sorry to bring that news to you all, but you're right. I mean, we saw food prices up 7.5% last month compared to the same time last year. You now have U.S. households spending $250 more a month because of inflation. That's a big burden for a lot of households. A new survey today found that 8 out of 10 consumers now think inflation is the #1 issue facing the country right now. So no surprise to find some popular game day foods have ballooned in price, which means your Super Bowl dinner.
Welcome to the club, my dad's burner account.
About 14% more this year. And there are a number of reasons why. We keep talking about the supply chain disruptions. We've got labor shortages, shipping delays. Add to that, Deirdre, higher costs for things like transportation and packaging. And you've got yourself a higher Super Bowl party cost.
So any advice, Alexis, for those celebrating on a budget?
Yeah, you know what? I actually just wanted to show you all some prices right now because they're kind of eye-popping in some of these popular foods. I just want to show you quickly wings. What's a good Super Bowl party without wings, right? So those prices
God, that's
are up
nuts. Look at those prices.
14%.
At least the beer
That's
didn't go
for,
up that much.
boneless. 26% more for bone-in. You got hamburger meat for your chili and sliders up 17%. Pork is up 7%. Chips, they're more cost-effective, maybe not the healthiest choice. They're only up 1%. And even beverages, you're going to be spending
The chips
more.
have to stay $1 per bag.
14%, beer up 4%. But if you're like me, Deirdre, and you like a good guac at your Super Bowl party, get ready to pay a lot more because avocado prices have doubled in the past year. Mexican avocado prices are now at a record high, and a big reason for that.
This is why they charge
the
more for guac.
Transportation costs and our supply continuing to be high. You asked if you want to do this on a budget. Well, I would say hold off on a lot of the protein, go towards more of the veggies and the fruits. They are higher, but relatively speaking, not as high as some of the proteins. And also,
This is all very interesting to think about.
stay away from the prepackaged
But
foods and those pre-cut vegetables and fruits. Do what I do.
When it comes to these prices, we got to start looking for ways that we can all save so that we can continue investing while prices are lower. There's not a whole lot we're going to be able to do about gasoline or rent, things like that. Mortgages are going to get more expensive. But you need to be shopping at Aldi right now. All these luxury places to get expensive wings, it's no good. And all the money you spend on food is going to be worth, is taken away from what you need to be investing.
Are there any we can glean hope from in the meantime?
I'll try to leave you with the glass half full. Actually, first of all, in terms of the Super Bowl, I'd like to see my New York Giants in the game. It was a tough season. So first off, would like to see that. But prices need to come down, and we're only going to see that if inflation starts to back off. We know the Federal Reserve has already put in place a plan to raise interest rates.
There we
Some on
go.
Wall Street are
Down
expecting 5 to 7
440.
interest rate hikes this year alone to rein in those higher prices. Lots of analysts I'm talking to believe inflation may peak around March, and we could end the year with about 3% inflation. Doesn't that sound like a bargain right about now? But only time will tell. Deirdre?
And Alexis, all right, we didn't ask you to come on and share this, but we have to ask because you're here. Who's going to win?
Oh,
Rams.
I have to go with the Bengals. I mean, they've never won in franchise history, right? So I'd like to see nothing against the Rams, but I'd like to see the Bengals win.
Alexis going for the underdog. We are going to take it. Alexis Christoforous, thank you. As always, good to have you with us.
Sure.
Coming up, as you know, it is almost a Super Bowl time as you prepare to watch with family and friends.
All right, let's talk stocks for a few minutes. What are you guys playing right now? I mean, the way I'm looking at it right now, this is going to be an opportunity to buy long positions that you actually really want to get. Think about it. Put your goals in mind. Right now, my goal, or one of my goals, is to build a large dividend portfolio position so that I can just stop doing things when I don't feel like trading. I'm an addict, so I'm always going to trade. But one of my goals is to buy dividend stocks and get to $24,000 of dividend each year. Right now, I'm at about 16, 17,000. I've got a little bit of ways to go yet. But this market meltdown is an opportunity for me to buy more into those dividend positions. The cheaper the stocks get, as long as the company keeps their dividend the same, you can buy more shares as the price drops. All right, if the stock price is $100 and you have 10,000, you can buy, 100 shares. But if it drops to $90 a share, now you can buy more shares, and that means more dividend yield for you. So keep eyes open right now for stocks that you really want to pick up, but keep your goals in mind. What are you actually trying to achieve this year? If you want to make the most money possible, get into growth. If you want to get into dividend like I do, buy stocks with good earnings, like Coca-Cola just had great earnings, really good opportunity there to pick up more shares. They just increased their dividend too, not by a lot. It's by 4%, which for them is like, 1 penny. But it all adds up. If you don't have goals in mind, start thinking about those now, because this year is going to be an opportunity to really reevaluate your portfolio, put money in places where you really want to see it, and then invest for those long-term goals or short-term goals for all I care. As long as you have some intent in mind, you'll be able to trade much better than if you're just going in and out of positions, trying to make money, but without really any idea of what you want to achieve. Does that make sense? I hope you guys know what I'm trying to get at. Today was a really rough day for me in the market. I think I probably lost more than 30K. As of 3:30, I was down about $30,000. So what did the market do in the last half hour? Not a whole lot. It stopped going completely nuts on the way down. But it was definitely a really, really rough day. So thinking on the bright side, my covered calls are now out of the money when I thought I was going to get assigned. So that's good. And it gives me some extra cash that I can invest into those longer term positions, especially dividend. So 30K, I mean, that is a lot. I mean, I'm down about 15% this year. So it's worse than the NASDAQ, but that makes sense because I'm in a little bit more of a high risk position than the rest of the NASDAQ is. I got a lot of leveraged positions. I've also got a lot of dividend too, which kind of balances it out. But overall, I'm definitely a little bit higher beta than the NASDAQ. So it makes sense that when the NASDAQ's down 12, I'm down 15. When the NASDAQ goes up 10, I'm up 12. So it's going to be like that. It's no big deal. What else we got? What do you guys got going on here? AMD, yeah, that one's down big time. Not a good trader. Keep the Wall Street Bets videos. Your live streams are trash. All right. Thanks, Royal Montana. How many subscribers do you have, by the way? Let me know. It's all good. Captain Venom deposited $600 when he had $200 in his bank and made $1,000 on SPY puts. Honestly, right now, SPY puts, any puts right now are not that bad of an idea. Just go in and hedge again. You know, you can even speculate with some puts. They're going to be expensive, but if you're looking at call credit spreads, use the premium to buy some puts, that's an option for you too. Just keep in mind that these downtrends, they usually have these violent recovery rallies, these relief rallies that go up 4% in a day. Those happen. Those are your opportunities to sell short.
Okay, he's really like the king. But so these are the kind of fun things that you can do. I barely hit that one. That would take Cooper Cup, I think, to pull that one in for me. I don't know. How many
So QYLD, yeah, that one's taking a beating for me too. It's not nearly as bad as the NASDAQ though. I mean, QYLD is going to lose money when the NASDAQ goes down, but it's still going to give you your 1% dividend every month, which is really good. Over the long term, that's fantastic. So I've got about, I think I have 3,200 shares of it. So it's just giving me money every month, even if I do nothing. All right, Nick Morodziuk is in, he's Russian, but he's in France wondering, if war starts, what will I do? Start pretending you're Ukrainian. That's what you do. Yeah, White Raven, you said, are my dividend recommendations still good? So the highest dividend, the highest risk dividend position I have right now is probably QYLD. But if you want to start investing in dividends right now, choose SCHD, SPHD, pick one of those. Those are fantastic. They're invested in a wide breadth of stocks. They're not those covered call type positions. QQQX is also a really good one because the fund will adjust how many covered calls it's selling against its NASDAQ position based on market conditions. So as the market is dropping, it's probably selling more covered calls. And that means that you'll get higher dividend. When the market starts recovering, the fund is selling fewer covered calls, only maybe 30% of its position. So when the market is going up, it's keeping more of its position in the index naked. When stocks are going down, it's selling more covered calls against the NASDAQ in order to get additional premium. So QQQX is probably better than QYLD, but you don't get that 10% dividend every year. You get 5, which is still great. But take a look at that one if QYLD is not working out for you. T Angel just says buy S triple Q. I mean, you can do it, sure. Juan wants to know when I'm releasing a T triple Q video. I didn't actually plan on making one of those. I don't know if you guys got that idea. So when it comes to AT&T, so AT&T is, they're spinning off, I think, what is it, Discovery Plus or something like that? They're spinning off a company and pinning all its debt on them. All right, so they're spinning off a company so they can crucify it, basically. That's going to make the value of the total company of AT&T right now drop, but its financial position is going to be much stronger. So we know it's going to drop its dividend. I think it may have already done that. But over the long term, you're thinking about it. You're getting AT&T as a company. You're getting the spun-off company once they actually complete the spin-off. So over the long term, I think there's still some strength there. It's just how long do you want to hold on to this thing before you start seeing some returns on it? All right. Tiziano says he lives in Ukraine. He wants to say there will be no invasion. The number of Russian military on the border is not enough to attack one city. I don't know about all that, but what about, is Russia setting up its, we talk about how many troops there are. Do they have their field hospitals set up? Do they have their fuel depots set up? Their forward aircraft refueling points, are all of those set up? Once you start seeing field hospitals fully equipped, ready for war, that's when you know that they're actually planning on an invasion. When their fuel depots are set up, now they're planning an invasion. You could just dump troops somewhere and give them some food and have them posture. That's fine. But when you actually go through all those motions to set up a fully mission-capable war unit, that's when you start worrying. I don't know if they've done that. I don't know. Nobody's talking about forward aircraft refuel points. I got no idea if they've done that or not. Or field hospitals. But that's probably what we need to be looking at. Somebody at the Pentagon's probably looking at that. But the news is not. What else are you guys talking about? If coin drops below 180, he's going to call debit spreads. Okay, that's a good idea. Let's see. I'm trying to get into the comments and see if you guys have any good stuff right now. Quiddizzle wants to know how my NFTs did. Are you talking about the ones I made? Because I sold like 2 of them and then never looked back. The ones that I bought, they're useless. They're gone, man. I want to make a video about what NFTs could actually do on the positive side and why so many of them right now are never going to live up to their expectations. There's so many things you can use NFTs for, but we just don't have laws to back them up. Like, you don't actually own music if you buy a music NFT. You just own the hyperlink to the music, and nobody even cares. You know, go take it to court and say that somebody has stolen my property when you're talking about an NFT. You're going to get laughed at. My MOS in the Army was counterintelligence, for those asking. Let's flip news stations here. These guys are talking about the Super Bowl. I want to talk about like some real shit. This is not what I'm desirous of right now. It's not my style. All right, what else we got? Sky News, market coverage Friday. All right, can we watch Yahoo Finance, or am I going to get? Yeah, let's see what happens here. We're going to pirate Yahoo Finance's live stream on me.
Context of some of the bigger moves that we've seen, just par for the course for this year. Here's the Dow. You can see it's down 1%, and here's the S&P 500 down 1.3%.
Yeah, why am I down 3%?
In the green that I'm seeing in terms of indices, the Russell 2000, that's actually up 1.5% today. So market currently dealing with a Fed that has to deal with the highest inflation in 40 years. Vladimir Putin potentially invading Ukraine. Going to be a lot to dissect this weekend, and Monday's going to be very important as well. Let's take a look at the bond market, because that has been extremely volatile as well. Got that huge surge up on that CPI print on Thursday, and then we just reversed a lot of it today. That is a big move in the bond markets, and not surprised to see equities doing what they're doing. And here's the U.S. dollar index. U.S. dollar is now up about 0.7%. Doesn't seem like that much, but for the U.S. dollar, that's a decent medium-sized move, I would say. Bitcoin, we took a look at Bitcoin. Definitely a correlated asset in terms of what it did today. It dropped with equities prices on that news about the Ukraine. And here's WTI. Indeed, a nightmare scenario for potentially Chair Powell, because rising crude prices, that means higher inflation.
Hey, energy right now has kind of been the safe sector this year. I mean, it's one of the few that are actually up. So ET, Energy Transfer, I think that company is in a better position than it's been financially in a very, very long time. So ET, 5%, I think it's probably more like 4% dividend right now. But fantastic company, controls most of the pipelines in the U.S. for fuel, for fossil fuels, particularly crude oil. So I'm invested in them. I wanted to add more below 10. I'm not sure if it's below 10 today, but that's a good one to pick up here too. Good dividend stock, and it's got growth ahead of it too. And I'm curious, are you guys, am I the only one that's freeloading right now, or are you guys in on that too? Because freeloading is kind of what keeps me motivated to keep investing when I'm watching all my money get washed away.
Yahoo Finance's own Rick Newman. Rick, first we got to start with Biden and Putin going to be speaking on Saturday. What do you make of that?
Well, we'd all love to be in that conversation. Don't invade, Wad. Stop telling me what to do, Joe. Will this change anything? Probably not. Putin has many grievances. They've talked before, and it doesn't seem like a last-minute conversation is likely to change anything. But I guess it's better than them not having a conversation. This can. One of our prior guests said this. Is a binary outcome, and I would just like to say I don't think this is a binary outcome. We don't know what Putin really intends, and there are many, many different things he could do. He could do the full-on invasion that the armchair generals are all analyzing right now. He could blockade Crimea from the Black Sea to the south without invading, just to cause economic pain. He could conduct electronic warfare without a physical invasion. He could go in and back out. He could just menace Ukraine for months or even years and keep everybody guessing about whether he ever intends to go in. So I don't think this is something we're necessarily going to know.
Hey, Jorge Delgado, how long did it take you on Rise of Kingdoms?
That in a way might be the worst case scenario for markets. If nothing happens, I think we will probably see energy prices relax a little bit. But if this tension just continues in any real tangible form, it is trouble for both the gas and the oil markets.
And Rick, these fresh geopolitical tensions are coming amid ongoing concerns over inflation here in the U.S. President Joe Biden has said previously that it's primarily the Fed's job to bring down inflation as part of its price stability mandate. But where's the Biden administration in its response now, as we had CPI inflation jumping by the most since 1982?
Biden's in a real jam.
Hey, I'm good. I want to hear this first.
Doing something, but there's just not much the president can do about inflation. I've been noticing on Twitter and other social media, there have been clips popping up of Gerald Ford in 1974 giving his big speech about we must whip inflation now, the famous WIN win.
That's an old
campaign,
term.
Which was feeble and didn't
I think
work.
that's Reagan's thing.
Joe Biden's first term in the Senate was during when President Ford became president, and he gave that speech. So Biden ought to remember how embarrassing it was for the Ford administration to say we're really going to do something about inflation when it turned out there was nothing they could do. It did take the Federal Reserve many years to get inflation under control back then. But Biden's in not quite as bad a position as Ford was then. Inflation was in double.
That's what happens when I drink energy drinks.
Peaked close to 15% in the early 1980s. But there's just not a lot he can do. He says he's doing things trying to make U.S. producers more competitive, more domestic manufacturing. None of that is going to make any difference to inflation in the short term. And this probably also further reduces the odds of this Build Back Better plan passing Congress this year, because the one key senator who opposes it, Joe Manchin of West Virginia, he keeps saying this will make inflation worse, not better, so we really better not do it. So I just don't think there's much Biden's going to be able to do all year. He's relying on the Fed to handle this problem.
All right, a lot to keep track of there.
The pressure on JPOW is high.
We're going to keep tabs on whether the White House confirms that President Biden and President Putin of Russia are going to be speaking on Saturday. And then additionally here, while we have you, Rick, you got to break down the latest on the trucker protest for us. Where things stand right now, this is continuing to impact everything from automotive production to just the ability for the supply chain to continue to operate.
I mean, I think these guys should go home. They're not going to go home. They're getting Canada's attention and basically some of the world's attention.
No, fuck it. Continue the protest. Like, I don't care what you're protesting for. You get this kind of movement behind you, you're going to get some results. So, yeah, there's probably a lot of elements right now that are going into this protest. It sounds like it's mostly about the lockdowns, the coronavirus response, the mandates, this or that. Honestly, the pressure that the government has put on people to get vaccines is probably stopping people from getting vaccines. I mean, in the U.S., we've got Fauci on TV every week talking about how important it is to get vaccine. But the people that aren't vaccinated at this point, they hate Fauci. So why we have Fauci encouraging people, I don't get it. You'd be better off getting Hulk Hogan on TV encouraging people to get vaccine. I'm sure the situation is the same thing in Canada. Putting too much pressure on people to get vaccines is actually turning them off. So these truckers, let them do their thing. Like, have at it. You know, I think it should be a personal choice. I think the choice is obvious, but let it be a choice. And this guy here, he's saying these people should go home, like give up on the protest, but it looks like they're having ravishing success, so they're not going home anytime soon. All right, while they're taking a break here, so I asked you guys about freeloading. A lot of you guys are into it, a lot of you aren't, but I think the best one, there's two that I really want you guys to look at. Userinterviews.com is probably my favorite. Like, there's a couple that I really like, but gun to my head, userinterviews.com, that's going to get you money. I've been making about $200 a month off of them by just doing focus groups. So you give them a half hour, they give you $100. You know, you do a couple of those a month. That's the equivalent of having like $30,000 invested in Coca-Cola, you know, getting paid like that. And then the second one, I'm going to pin the comment here. This is my referral to Free Cash. This one I love. I've made 5 Litecoin, and you can cash out in multiple ways, but Litecoin is the way I usually take my payouts. I know a lot of people have had success with this, and there's a lot of people that are skeptical that you can actually make money online like this. But what they have you doing is trying out games, trying out apps, and they just pay you for it. So rather than advertise, like spend a lot of money advertising their products, they just give you money to try it. So as long as you don't get suckered in, you know, you can just try the app, get paid for it, cancel anything that you would otherwise be paying for. So Check it out. If it's not your thing, it's not your thing. That's no big deal. There's plenty of ways to make money out there. And user interviews is, honest to God, probably my favorite. If I had to put free cash against user interviews, I don't know why there's any reason to put those two kings against each other, but user interviews is probably the way I'd go just because it's so effortless. So check out both of those websites. Do some freeloading. Get money to reinvest while the market is down. And it is fun to be able to get paid to tell somebody that their app that they're trying to build is not good. Like, that's an enjoyable experience. Or to tell them that it's great and you love what they're doing, they just need to work on this or that. So you can have you can have an impact and you can also get paid for it. So freeload if that's your thing. It's absolutely my thing. I still want to do that challenge and I want to buy a house here too. Let's see. Buck got paid $100 in 1998 for focus groups. We're still getting paid $100 now. So that means that inflation is, I don't know, what does that mean? Does that mean inflation has impacted? That means that the supply of people trying to do focus groups has increased. Yeah, supply and demand. I don't know where, so userinterviews.com is just this. Just do that one. There's no referrals to that. But if you just go to userinterviews.com, you'll get right to it. But that's, so I did one, I'm not supposed to tell you what company it was, but it's a company that I lost a lot of money on investing. They did a focus group, and I was able to give some feedback on a new widget on their app they're trying to develop. 30 minutes, $150. Like, you can't beat that. Where else am I going to get paid $300 an hour to give my opinion? So user interview is a real good one. I need to make a freeloader episode now because I'm ready to reinvest it.
But I'll tell you, you look back historically here, the NFC, when you look historically, the NFC does actually a lot better.
We're talking about football again.
9% of the time when the NFC wins versus about 2/3 of the time when the AFC wins. And the returns are actually...
oh, shit. Hold on, guys. This is really interesting.
So you'd say, if you look at history, you might side with the NFC.
So, Ryan, taking a look at this data, were there any exogenous factors, common exogenous factors that were happening during years where the S&P was positive when the NFC teams did win the Super Bowl that we could potentially
This is the DD I crave. I need to snapshot this. Somebody take a snapshot. I can't do it.
Rising?
Shit, I missed it.
I wish that there was.
I'll go back to it.
We looked. I mean, it's pretty fun. Now, I do want to get something. I'll be right back here. Here we go. All right. So I do have to show you guys something. I am a Bengals fan. All right. So there's my Joe Burrow jersey. I've been wearing this. They've won every game since then. I'm originally from Cincinnati. Here's one for you. The AFC, though, I said it wasn't all that great long term. 10 of the last 11 times the AFC won the Super Bowl, the S&P 500 was higher. All right. So historically, as a Bengal fan, I had to find a reason to root for the Bengals. And lately, AFC wins have done very well. So it's a playful thing you talk about. You don't want to invest in it. I'll just say very quickly, though, guys, with the Russia, Ukraine, we looked at all the major geopolitical events that have taken place since World War II. Here's the truth, all right? You see about a 5% correction. I'm talking World War II, we're talking 9/11, all these major things. And in about 3 weeks, usually the S&P makes up for it. So it's very serious what's happening out there right now in that part of the world. But from an investment point of view, if the economy's still pretty strong...
See, this is how you know that we're really struggling right now, is that we're using football. Jeez. This is crazy. They're dead serious right now looking at football statistics to determine what the S&P is going to do. That's fantastic. This is the DD that I crave. I could make an entire video on that.
I just, for my own edification, would love to know more about that. I love that you grabbed your Bengals jersey, and you're probably loving it.
Hey, I see some of you guys talking about how you're not getting your payouts from free cash. Go to like your profile page and then check the pending offers, because sometimes it just takes a couple of days. And that's fine, but it'll show up in your pending offers. Failing that, if it's still not there, go to the offer wall where you chose the offer, like where you downloaded the app from, and then check your pending rewards. It should at least say clicked or open or pending, something like that. If it doesn't say any of those, then just contact support and they'll work it out for you. But I've only had problems one time actually getting my payout, and I may have actually done something wrong because I opened apps up in the wrong order, so I signed up incorrectly. I'm still working with help on that, but by and large, they do take pretty good care of you if you contact support and tell them there's a problem. They are entirely dependent on their reputation, and it's a really ugly business, this whole getting paid to download apps thing, so they want to keep it, they want to do the best job they can. So don't be afraid to contact support. They get back to you in like 24 hours.
We probably probably will see more days like today, and not just on the 2% down, maybe 2% up. You know, we had.
Why did
last
AMD
year
get
being
destroyed today?
27%, only a 5% correction all year. Come on with you guys a couple times saying, listen, this year's not going to be. We're not going to be as spoiled. Even a 10% correction, maybe 2 this year could happen. And don't forget, midterm years historically are the most volatile of the 4-year cycle. You see a 17% peak to trough correction in a midterm year. But the truth is, again, earnings have been super strong this earnings season. I know Facebook dropped.
Yeah, Facebook got destroyed.
But earnings have been really strong. And I know that today's consumer confidence number wasn't that great with the Michigan consumer confidence. But what we're seeing, consumers are still spending, jobs are still strong. So the underlying pinnings of this economy, in our opinion, are still very, very healthy. I mean, look at the industrial metals. They keep going up. I know some of that's inflation. I think some of that's global demand. In fact, I think a lot of that's global demand. Copper would be bringing out the new highs. Aluminum making new highs. I mean, those are positive signs in our view of the global economy. So this volatility could be here to stay, but we'd stick with the thesis. This is still a global bull market. Stick with cyclical value. That's still one of our favorite areas.
And so even as we're kind of taking a look
I
at
am on
the
Rumble,
averages
yeah.
and where they finished on the day, we were having some discussion with our markets guests a few minutes ago, and particularly around whether or not there would still be some of that buy on the dip type of sentiment in play, considering now you have the added thread of the international tensions escalating to the extent that they have right now, and we'll see to what extent conversations take place over the weekend between the U.S. and Russia. What particularly would you be watching for on any type of buy on the dip sentiment in this regard?
Yeah, well, what's been interesting, you mentioned the market weakness.
Does anybody watch videos on Rumble?
Weakness, right? We've seen yields
I posted a video on Rumble. I got like 170 views.
The safe haven that it's been before. We've seen financials and energy do well. So there, the message of the market, there's, I hate to say this time is different, but really since a QE world 13 years ago, this weakness, we're seeing a different reaction. So I think investors need to be aware of that. But also, the S&P is just trading kind of, in between its 200-day and 50-day moving average, kind of just going sideways, really. We're almost gone nowhere since September, okay, if you look at the S&P, honestly.
Yeah.
So, yes, it's not perfect. We're down for the year. The NASDAQ's down, I think, 12% for the year after a big rally. So just some consolidation. The first and second quarter, again, of a midterm year, guys, is like 2 of the weakest quarters out of all 16 quarters of a 4-year presidential cycle. So just kind of be aware of these things. But still, when all is said and done, earnings are justifying things. Technology earnings have been amazing.
Hey,
Right?
Buck,
I mean,
Rumble
it's
is
really
it's a
strong earnings across
place
the board.
for
That says we're not
YouTube
driving
washouts who
forward
got
to
demonetized to go and
consumer.
post their content.
All right, Ryan Dietrich.
And it's not a bad
helping out,
website. It's actually really good.
financial chief market strategist joining
It
us
just
here
doesn't
today.
have the
He's got
audience
jersey.
YouTube has.
He's got the
Jersey
jersey.
up one more time. There it is. There you go.
You just need a cigar now, and you've got the complete outfit, I suppose.
I hope
Which
so.
suits you
I
guys
hope
going
so.
into the game. Definitely. Ryan, appreciate the time here with us today. And everyone, on the other side of this short break, if you're gearing up for retirement and looking for a strategy to combat inflation, we've got the
Bitcoin.
details for you after the break.
All right. Retirees, make sure we don't miss out on this after the break way to combat inflation in your portfolio. I don't know if you guys caught that real quick, but energy is up for the year. So that's kind of the safe haven right now. I think the only position I have that's really doing a great job this year is Energy Transfer. Ticker is ET. It's a dividend stock, but it's in its best financial position in a long, long time after restructuring in 2020 and 2021. So that's the way I'm playing that right now. God, look at Meta, Facebook. It's just getting hammered. I think that's oversold, to be honest. I think they've got some headwinds ahead of them, but it does not justify this 40% sell-off. And it's like 30%. That's a lot. Yeah, those that are asking, like, what is Rumble? Rumble is it's like an alternative website to Facebook, to YouTube. It actually is a really well-built website. It's good. I mean, you can get monetized very quickly. You don't need to hit all these big requirements. It's got integration with like community features and stuff like that. It's a good website. It just doesn't have the audience that YouTube has. So when they solicited me, they're like, hey, shut down your Patreon, go over to Rumble, we'll pay you every month. And I was like, I can't do it because I need the audience that YouTube has. So I'm just posting on both websites. And obviously YouTube is the stronger performer, but I think I'm just going to upload the same videos onto Rumble. I mean, why not? I think it's probably a better website, actually. It just doesn't have that audience that YouTube has, that global reach. You know what I mean? What are you guys predicting about the this emergency Fed meeting? I don't think they're going to make any changes to their decision making based off of that, but it is a little bit concerning that Jay Powell is calling for an emergency meeting. That alone would spook the market. I mean, forget Russia and stuff. You have an emergency Fed meeting, something's going to happen. I don't think it's anything different than what would have otherwise happened. But maybe this rate hike is coming faster than expected, or they're going to do it by more than anticipated. Remember what they're showing right now. The airlines, every industry is down right now except energy. Some of you guys that aren't able to buy Energy Transfer, it's probably because it's a master limited partnership, an MLP. Some brokers might not support that type of financial instrument.
Points, or about 1.4%. The S&P 500 down about 85 points, or 1.9%, and the Nasdaq Composite down by about 2.8%. Now, the S&P 500 closing both today's session and the week lower, as we've seen volatility renewed across risk assets. But shifting gears now, with consumer prices rising by 7.5% on an annual basis, investors are having to get savvy to make sure their assets aren't getting crushed by inflation. Ken Murray, Retirement Planners of America Senior Retirement Planner, is here to break down some strategies for hedging against and beating inflation. This coming as part of our retirement series brought to you by Fidelity Investments. Ken, thank you so much for joining us this afternoon. Where do you think investors should be looking in particular right now as opportunities to outpace inflation?
Well, you know, I'm a student of history, and I got into, I don't know if you can see this, but I got into my DeLorean. And I went back to 1982, the last time we had the worst inflation that this inflation now seems to be actually eclipsing, and looked at what happened back then and how would you have addressed that strategically during that time. The interesting thing is that when you have a lot of inflation, what happens is that as prices go up, companies want to protect their margins. So what they do is they raise their prices as well. And the dollar amount of their profits goes up, even though if you take inflation out, it really did not go up. But stock prices generally are a reflection of profits. So if profits are being inflated, then the stock prices will be inflated as well. So generally speaking, the best investment vehicle that you have to combat inflation with are stocks, and we've seen what they've done recently. Now,
this guy's audio is bad. That's not me, guys. I promise.
Tend to be the best inflation fighter that you have, historically speaking.
Okay, and so if volatility persists, how then do you need to shift your strategy, your plan?
So thank you for asking that, because part two of the story is that as prices go up, eventually what happens is the consumer is priced out of being able to buy anything. And so if they start feeling the effects of that inflation, then they stop buying, and profits now are going to get hurt. And when profits get hurt, the stock prices go back down again. So again, if you look at 1981 leading into 1982, the stock market went way up. It was a quite remarkable run. But then when inflation got too much for the consumer to bear, then we saw one of the worst bear markets we've had in the modern era. So if the Fed is not successful in controlling inflation, then we could see another big bad bear market. So diversification is extremely important, especially if you're over 50 and the people we work with are within 5 years of retirement or they're already in retirement. So that 10-year period, I'll say, if you're in that period, diversification.
Does anybody invest in firearms? And I don't mean the firearm stocks. I mean, is anybody literally buying ammunition and weapons in order to fight inflation? Because I've heard from people that the value of weapons, literal guns, is actually, like, the value of those weapons is increasing at an exponential rate year over year, especially when a Democrat gets elected. I don't own any firearms because I think I'm more likely to accidentally kill somebody than I am to defend my house, but I will do literally anything to make money. So I've got no problem stockpiling a bunch of 9mm ammo, you know? If you guys invest in it, like, let me know in the comments if that's like a legitimate investment. This is obviously for the United States only. The rest of the world, you can't go to Walmart and buy guns. But in the US, you can do that.
Now, if the Fed goes too fast, it's kind of like you're in a car, the Fed's driving, and you're holding a cup of coffee in your hand. Now, if they slam on the brakes, you're going to spill hot coffee all over yourself, and that's not going to be very much fun. So the hope is that they can keep things on a smooth, even keel, keep the markets properly informed about what's going on so nobody panics. But, you know, the important thing is make sure that you are properly diversified and you're only taking as much risk as is necessary to accomplish your financial goals. being greedy right now and trying to go for outlandish returns, I think, would be detrimental. Again,
Get the
especially
fuck out
if
of
you're
here,
over 50.
man. Okay.
Also having
He's talking about old people.
to say, you know what, this is not where I want to play anymore, and you want to shift your assets out of equities and potentially into safer assets as well.
Have you been able to quantify for your clients how much inflation has actually impacted the amount that they should have ready for retirement, and where it'll even impact their lifestyle post-retirement?
That's an excellent question. One of the exercises that we go through with clients and prospective clients is we do what we call a retirement cash flow plan. In that plan, we look at how the sources of income that you're going to have, and we also look at your expenses. And we apply...
All right, so this guy's talked about boomer investing, but he does make a really good point here. So when people invest, especially when they're young, they don't really have goals in mind. So they'll say, I have $20,000, what should I do with it? Well, that's depending a lot on what your goal is. If your goal is growth, you should invest aggressively. If your goal is to make a little bit of money and build up over time, you're making deposits, you may not need to do that. Like, think about what you actually want when you retire and at what age you want to retire, and then work backwards from there and figure out how to reach that goal with the least risk possible. Like, my goal right now is trying to make $25,000 a year passive income. I can do that much more easily with dividend than I can by trying to wheel TQQQ. So that's why I'm working backwards, and I figured with my portfolio, I can do that. If I were trying to wheel TQQQ to make $25,000 a year, yeah, maybe I could do it, but I'm taking on a lot more risk than I would if I could just buy some dividend stocks. But I mean, he had a good point there. So some of you guys are talking about learn how to make ammunition. But what we really need to learn how to do is make indirect fire assets. All right, so mortars, cannons, things like that. You watch any movie about zombies or survival or post-war apocalypse environments, everybody's using direct fire weapons against each other. That means you have to expose yourself to enemy fire in order to fight them yourself. What you should be learning how to do, learn how to make indirect fire weapons. That way you can fire your mortar from a covered position, attack the enemy with shock and awe. They don't even know where you are, and then you can quickly pick up and move. You can't do that with direct fire weapons. So I think the best way to go here is not stockpile ammunition for in case of apocalypse, but learn how to build like trench mortars. That would be the much better option. It's probably a lot harder to do and it's a lot more dangerous, but they're a lot safer. And you can't terrorize somebody with direct fire weapons the same way you can with indirect fire. So keep that in mind. That's all I'm saying there. So Kidsel says, Mikey, weren't you selling naked straddles 2 months ago? I actually am doing that now. I am still selling naked straddles. The covered call side is doing great. The put side, I'm just rolling it forever and ever and ever. Binary Happiness says, why do I jump on the bandwagon on promote the fear? Why not name your stream Biden kills my portfolio? I know why. Cheap clicks like mine, no need to answer you. That's exactly why. Because nobody's going to click on, people want to know about the war. So that's what I started off streaming, but every news station stopped covering it, unfortunately. All right, what are you guys saying here? Switching to pistols is always faster than reloading. That's fun. How valuable will weapons be when someone sends a drone at you? Not very valuable, but if you're in a closed environment, drones can't really do as much damage. So keep that in mind. All right, looks like we're going back to football here.
Show is always a major part of the annual sporting event and a big boost to the artists performing. We have Yahoo Finance's own Ali Canal with us now.
Do you guys want to keep watching people talk about finance, or do you guys want to switch back and see if we can find something else on Ukraine and Putin? These guys are doing DD on the stock market based on the Super Bowl. I don't know. I mean, that's cute, but not for the third time they're attempting it.
Mary J. Blige and Kendrick Lamar all set to perform at this year's halftime show, the third production from the NFL's partnership with Jay-Z and Rock Nation. Now, I do have to mention that it was revealed last night that Snoop Dogg was sued for alleged sexual assault and battery. It is unclear at this time whether he will still perform at Sunday's event. Representatives for the rapper did not immediately respond to Yahoo Finance's request for comment, but that's something that we'll be keeping an eye on heading into Super Bowl Sunday. But when we talk about halftime performances more broadly, the NFL famously doesn't pay their Super Bowl halftime performers, but normally that post-performance surge many of these artists see is often or the lack of a paycheck. So just taking a look at some of the past performers, last year The Weeknd saw nearly every song he performed land on the Rolling Stone Top 100 Songs chart, in addition to his 2020
Ukraine
album
war.
After
All right.
Hours, delivering a sizable...
Let's all right, so we're talking about which rapper, no, they're not all rappers. Talking about which artist, which pop artist to invest in after the Super Bowl. Let's see if we can switch back here. I want to go back to, let's see. Let's see if we're going. Breaking news, White House confirms Biden and Putin call tomorrow morning. All right, so that's fun news. Let's check these guys out. Looks like they're at commercial right now. We'll come back to this. Looks like the more exciting stream right now. Not that the market's closed. There's just not that much finance to talk about at this point. So what's the play when the war economy kicks off? So there's a lot of tickers right now that would benefit substantially if we start fighting. I mean, Lockheed Martin is the one that comes to mind first. They did great today. I think they're up like 2 or 3%. LMT is the ticker. You got Raytheon. I think that's RYX or RTX. I think it's RTX. I'm not positive. Booz Allen Hamilton is also an option. Boeing, possibly. There's a lot of companies that will be successful if we actually go to war. I don't think we're going to war, personally. But even the hype about the possibility of going to war is going to send some of those war stocks into the moon. There used to be an ETF for that. I think it's called like Armor Holdings or something. Armor Investments. I don't know if that ETF actually exists anymore. This was like in the height of the war in Iraq. Let's see. All right, we got true crime going on. Yeah, Raytheon makes a lot of the, I think they make a lot of the drones. I'm not positive. I know Lockheed Martin is heavy ammo, missile. I think, do they make the Hellfire or the Tomahawk? Maybe both. I'm not even positive which one. General Dynamics. Yeah, I forgot about that one. General Dynamics is a good one. Any of the defense contractors, really. Northrop Grumman, Halliburton. These will all be good. What else we got? Sanctions, armor, maybe. I don't know. Raytheon makes drones, missiles, and communications. They're pretty diversified. There's a lot of good war stocks. Like if you're going to bank on fighting against Ukraine, I hope not, fighting against Russia in Ukraine, then those are good options. Invest in some of the war stocks. Raytheon does the Tomahawk according to Johannes. Fung Dark says Lockheed planes and shit too. Northrop planes and jets, yep. Lockheed, Raytheon, Boeing all build missile systems out of Redstone Arsenal. That's in Alabama. Boeing number 2, okay. Austin College used to work for Raytheon Cybersecurity Division. He says people quit like crazy when our team started working on weapons 7 years ago. Interesting. Yeah, I mean, I think there's a lot of posturing right now that Russia's doing. They're looking for concessions from Ukraine, and they haven't been able to achieve those concessions with things like cyber attacks, with proxy war. They're ramping it up. Now, does that mean they're actually going to conduct an attack? I don't know about all that. But even threatening Ukraine and really showing them this is what you're risking by not making concessions to us. And that primary concession would be don't join NATO. Russia really likes having that strip of generally neutral countries. Finland, in the north. You've got Latvia, Estonia, Lithuania, and, just on that border of the sea there. When they joined NATO, that was a big deal. Even though they have almost no offensive capability, I think Lithuania is the only one that even has tanks in its military. Just having those countries there as part of NATO means that if Russia wants to have that neutral strip, they want to be able to assert their authority on their own border. They can't do that now without provoking NATO. Because now you've got 3 countries right there on that border that are part of the NATO alliance. So even though Estonia doesn't have tanks, or they have very, very few tanks, they've got Poland and Germany, the US, all behind them. And I think Russia really wants to make sure that Ukraine cannot join NATO, so they will threaten them in any way possible to make sure that they can't do that. That's what they did with Georgia. The country of Georgia, when Georgia wanted to join NATO, Russia attacked Georgia. And now they can't join NATO because they have territorial disputes. You've got 2 territories of Georgia that are still under dispute. South Ossetia and I think Abkhazia is the other one. Those are claimed by both countries. And I don't really know how they run right now, but unless those disputes get resolved, Georgia is not eligible to join NATO. So that's a way that Russia kept a neutral country on its border. Yeah, Belarus is the Russian ally there. So that one abuts against Russia, and then Poland on the other side, and then Lithuania and Ukraine. So, I mean, it's got a lot of borders. I mean, that's a strategically advantaged position for Russia to be allied with them. And then Russia also has that satellite state in the Kaliningrad Oblast, which borders against Poland. It's like a fortress. It's also got very nice beaches, so it's a very interesting place. It's a warm water port for them, is really what it is. I mean, I think the biggest threat to Ukraine right now would probably be a large arming of proxy units, Russian proxies in eastern Ukraine. It's really softening that eastern border so that Russia can actually move in heavy equipment without real threat to them. Especially if we start seeing like water assets, like water lift, like boats, like for transporting troops, go into the sea in between Crimea and eastern Ukraine. The Sea of Azov is what it's called. If we start seeing ships go through there that are capable of transporting units, like actual ground tanks and fighters, then I think it's game on. And the very last thing Russia's going to start doing is setting up its forward aircraft refueling points and setting up field hospitals. If they start doing that, especially on the border with eastern Ukraine, I think that's game on, because that's a huge investment for them. They're really poking the bear at that point. So you guys are bringing up Lukashenko too in Belarus. So he's been under a lot of pressure because there were internal protests. But I think just as, much more importantly, I don't think Lukashenko is the president unless Putin is supporting him. I think that's the primary reason he's able to stay in power, is because Russia is backing their little brother in Belarus. What else are you guys talking about in these comments here? Military alliances, satellite states. Mark Medicine is from Estonia. Mark, tell me if you know, does Estonia like have a worthwhile military? Like, I don't know really what their offensive capability is, but I know a lot of those Baltic countries don't have armor, and I don't think you can beat Russia without armor and anti-armor. Faded Polo thinks that Russia is trying to prevent Ukraine from being bullied into joining NATO. That's a contrarian opinion right there. Captain Venom, don't worry, there's not going to be a draft. Not at all. Man, this news station is struggling right now. Like, don't they have correspondents out there in Ukraine that they could talk about this? Buck Starchaser says, every piece of armor, functional or not, is an anti-tank weapon cell. I'm not sure what he means by that, but according to Buck, Lord of War is the video to watch, the movie to watch if you want to learn how to fight armor with armor. Or anti-armor, I'm really not sure. June is asking, now I don't think war is very likely. I think there's going to be some kind of escalation. There might be some short-term military conflict like we had between the, Armenia and Azerbaijan. I think we'd be looking at something like that between Russia and Ukraine. I mean, I think Russia can probably bulldoze all the way to the Dnieper River, but it's still going to be a significant loss of life and a lot of money spent on it too. I don't think Russia wants that. That would be the most drastic move they could make in order to prevent Ukraine from joining NATO. That's a lot of firepower they got to put behind that. Even in the best case scenario, they might be able to besiege Kiev. But that's a big fight, and I don't think Russia wants that either. We're going to have to just go back to Yahoo Finance because we're not getting anywhere here, guys. Apparently the dollar is strengthening. That's good news, right?
Welcome back, everyone.
got?
Into a reboot. New faces, new platform, but hoping for...
All right. I'm very excited about the Fresh Prince of Bel-Air rebooting. June, don't worry. I don't think there's going to be a war. And if there is one, it's not going to involve the U.S. But it's making the market very giddy. What is GB News? All right, let's try another one. Can I get onto ABC News Live? And do I want to is probably the better question. All right, let's see what they got going on here. Maybe there's something more exciting. All the free news stations on YouTube are kind of weak. All the good stuff is all paywalled, and I'm a cheapskate, so I'm not paying for that. All right, ABC News, let's see what we got. Still on commercials. All right, we'll let it go. Buck wants to fight the Russians by giving them the Fresh Prince of Bel-Air. Now, to be fair, that would probably distract them for a little while. What I'm kind of gathering from watching these low-quality news stations is that really nobody knows what's going to happen in Ukraine. And if anybody did, then they'd probably be getting a lot more attention than they are. I don't think there's anybody who has a real strong track record of predicting what Russia's going to do when it comes to attacking other countries. I think it's probably a better bet that the U.S. is going to attack another country within the next 5 years than Russia will. All right, this is just a garbage news station here. NBC, whatever. Yeah, I can't say. Okay. All right, never mind. Bloomberg. Let's watch Bloomberg. At least we know it's going to be finance.
We begin with a headline from the Bloomberg Professional Service. Just getting word from Downing Street in the United Kingdom that Prime Minister Johnson did get a questionnaire from Metropolitan Police. The British Prime Minister has faced months of negative headlines about parties held in his Downing Street office during the pandemic. U.S. stocks lower today as investors sought safety in treasuries, with the U.S. warning Russia could take offensive military action against Ukraine as early as next week. S&P lower today by 85 points, down 1.9%. The Dow down 503, down 1.4%. Nasdaq down 300.
Like, I remember how spoiled we were getting over the last 2 years that you could just buy calls on anything and you would make money. I mean, you don't even have to know what a call is in 2020 and 2021. You just buy it and you'll make money off of it. It's a different market now. A different market.
Yes, well, those dulcet tones are totally not decayed. He's two-time Super Bowl champ, former linebacker, winning back-to-back rings with the Patriots, two seasons with the 49ers, and he's also worked with the sports platform Obsesh, and he is with us here at the Power Players Summit. How are you?
I'm great. Thanks for having me.
Well, it's great to have you here.
Oil volatility jumping. Can you invest in oil volatility specifically?
It's just the world of sports is just exploding on so many different levels. You know, what is it that's interesting for you right now when you look at the game and?
What's interesting, I mean, when I played, there was no social media, there was no Twitter, no Instagram, any of that stuff. I mean, it was at the tail end of my career. Yeah. So,
all right, I'm gonna go get my daughter. She's awake. She'll join us for a few minutes. She's not gonna cooperate, so we'll see.
To really tell their stories, I mean, that's an awesome time for sports in general.
Hey, I want to talk a little bit about going from player to coach and changing sort of the idea of what you're doing out there on the field. How do you do that? How do you make that transition? And how do you take what you learned as a player and help younger people and people earlier in their careers?
Well, you just have to, reflect on the time that when you were a kid or when you were young and realize that, these kids are they're trying to get where you're at. And so you have to draw from that knowledge and experience. And from going from player to coach, I think it's a lot of when you listen and watch other styles of coaches, then you can kind of see what works for you or what worked for you and what didn't work for you and try to make it your own.
All right, you know what we all want to ask you. So talk to us about playing with the Patriots and Tom Brady.
Dream come true. I mean, it's been over 10 years now. It's just, when I look back, it's hard to really believe that happened to me. But when I was drafted to New England,
Did you want to be there?
I didn't even know where it was, to be honest. I had no idea where New England was, what it was about. I knew they had won a Super Bowl 2 years prior. So getting there and being able to win a Super Bowl my rookie year was like, really? Because I never went to a bowl game in college. Went to Berkeley, the powerhouse.
Yeah.
Then to win it back to back was just like, oh man, I'm going to the Super Bowl every year. And then obviously playing with great guys like Tom Brady and that whole team, from the Mike Vrabels to the Teddy Bruschies, Troy Browns. I mean, everyone that was on that team was just a special type of player.
You do realize not everybody had the same experience, like the same. You know what I mean? There were other players.
You want this open?
Yeah, I mean, I was just talking to Eric Dickerson. It's like,
What happened to Meet Kevin? You guys are talking about it.
you play with New England. Oh, so you want some rings? Yeah, I want some rings. You want some rings? No, I didn't.
You want this? Uh-oh.
So it's like, wow, this Eric Dickerson, kind of, and all of the fact that I won rings. It's like, there are a lot of stories where I don't take for granted the fact that I won 2 of them.
Surprised by Brady's retirement at all?
I'm not surprised because I wanted him to go out where the game didn't take him out. You don't want to see him leaving the game on a stretcher, right? So the fact that he was able to do it on his own terms is great, but I don't count him out making a comeback.
Really?
I don't. Knowing the type of person he is, if he stays in shape and he sees an opportunity to win another one, he's going to take it, knowing who he is.
Where would he do that?
There's other teams, right?
There's other teams. I mean, I'm sure he would. I mean, San Francisco.
Can somebody corroborate that? Did Meet Kevin lose like all his money?
Well, it's interesting too as a player.
This is my lovely daughter, Becky Billions. Poor child's going to have a camera in her face by the time she's like 6. We're going to do a YouTube series called Stock Options According to a 5-Year-Old. And she's going to outperform most people on Wall Street bets.
Among a lot of players because, you got to think you're coming into a professional game at 20, 21 years old. You don't really have that much business acumen or business sense. So when you get into the real world, the NFL can prepare you in certain ways with, teamwork and working with people. But
Ice
there
pop?
are other things that you kind of miss.
No, it's not blue. That's orange.
Or not being in that realm.
Orange
So
ice
I
pop.
think a lot of players
Can
that
you?
get into it and
Yeah, it's yummy.
Okay. A lot to say about the Brian Flores lawsuit and the lack of diversity in the NFL, especially at the coaching level, not to mention the ownership of team levels. Would be curious to get your thoughts on this.
There you go.
And where you
Good ice pop eating technique.
Well, I mean, the game is changing, and the league itself is changing. Where they're trying to make room for guys, minority players and players. Obviously.
Meet Kevin got margin called. Maybe I should make a video on that so people will click on it.
I think there's so many worthy candidates.
I can get up into Meet Kevin's algorithm.
Well, it's you got to look at the top. I mean, the ownership is, I would say, 90% Caucasian, or what's the right word? European descent. So, I think when there's a time where players may come together and, crowdsource some money and maybe own their own league.
Well, I was thinking about your background. You're African American, right? Also.
They're talking about race on here. What's up? All right.
Irish descent. It's great, but that's so American. Like we're all got the melting pot, but it's so true, right? That's our.
She's on thin ice, man. You get canceled any day for saying the wrong thing just a little bit.
Understand that if that's the thread of America, right? And why isn't there more of that common ground in sports, in the NFL, and just more general?
Well, I do think
You
it's
think Mama
evolved. I think it's
texted?
gotten better if you look back
Let's
with
check.
the history of time, but I think with everything happening now with social media, the internet, we're seeing a change, and I think the game, and what I'm actually about to start doing myself, I'm founding a new type of league or a new type of exhibition game for NFL players. That's kind of what's happening with boxing, where you see Jake Paul and Mayweather getting these big events, but we don't even know who's the up-and-coming title runner, right? So I think the same thing can happen with the NFL, where you can get an exhibition-type game put together where guys can play one time in a pay-per-view event and people eat it up.
It's a
What does that look like? Is that something that happens in the U.S.? Does it go abroad? How is it paid for? How is it supported?
Well, similar to just like the boxing realm, you got big sponsorship money, but the
Yeah, and you guys talking about Meet Kevin getting destroyed, that's video content right there.
will cover it. And then you look at players.
Yeah, I might have to make a video on this.
Of that pay-per-view sales,
I was
and
just
then
going to say, players get a bigger piece of it, right?
Exactly. So that's something I'm actually in the works of right now, of putting together an event, because you got to think after the Super Bowl.
All right, they're not talking about anything interesting here. Hey, so in the comments, Mikhail Perro is asking, what's my opinion on lithium stocks? So I like lithium a lot over the long term, but right now my exposure to it is through the ETF LIT, which has a lot of exposure to China, and China's not doing great right now. So I'm down, I think, like 15% on lithium. But over the long term, I think lithium is still going to be successful. It's just going to take a lot longer than I had originally anticipated. So I'm holding my position, but it's not looking good right now. I don't think there's any reason to rush into lithium. But LIT is still a good ETF if you got the patience for it. Just getting ice pop on my face here. A lot of YouTubers are making videos about Meet Kevin. All right, I haven't done that yet, and I want to get up into his algorithm there. Let's see. I'm going to try to. I can be audio only. BS. So I'm trying to get Mr. IV in here for a little bit. His opinion is always valid.
Hot.
Yes, hot. Yes, it's very hot. Hey, stop. Stop. Yes, thank you. Yes, hair. You see hair?
Hat.
Yeah, hat. Yes. Hat. If you don't acknowledge what my daughter says, she just keeps saying it. So. Discord or Zoom and put my audio through. All right, hey, what we're going to do here, I'm going to get Mr. IV. You guys may know him from Discord. I'm going to get him through. We're going to do an audio chat, and we're going to get his opinion on the market and how he's investing right now. So I'm going to just call him. Yeah, funny sounds. We got him.
Hey, how's it going?
Hey, we are live. Welcome, Mr. IV.
Making sure that I'm muting the audio so that you don't get any feedback.
Yeah,
Hey, you
that's
mentioned
IV.
oil volatility
Yeah.
earlier.
Yeah, there was something down on the bottom of the screen there that said oil volatility is the highest it's been in many years. I don't know of any instrument that you can invest directly and specifically in oil volatility.
Oh, there's plenty. Do you have a futures account?
No, I don't know nothing about that.
You have level 4 options, right?
Yeah, I got level 4.
All right, 1 second. I mean, you could straddle USO.
Oh, I guess that's simple enough, yeah. Don't touch that, don't touch that. Are you...
There's also some ETFs that focus on oil drillers. USO, I believe, is actually a derivative of the futures contracts for oil.
Okay, so straddling or strangling USO would be a bet that volatility is going to decrease.
Right.
Yeah, which would make sense if you expect that the war with Ukraine and Russia is not going to kick off and then the energy market can cool down a little bit. I wonder if that fight is already priced in.
Well, I mean, the VIX is already above 25 today. The IVX on USO is 50, which is really high. I used to sell puts on USO right after it went negative to kind of play a contrarian play, and 50% is pretty high historically.
The VIX should have its own IV rank, right?
Well, the VIX is all it is the S&P 500 volatility.
Yeah, but it should have its like the VIX alone should have its own IV indicators, right? So like,
Yeah,
what's its IV rank right now?
Well, SPY right now, its IVR is 56. So I mean that you can look
A
from
little
a VIX
high,
perspective
yeah.
that we've been
Right.
we're above average volatility, and that's median average, not mean average. So you could actually spend only a few days above 50 IVR on SPY.
All right, so I mean it's inflated right now, but that's not like absurdly high.
No,
Yeah.
because the IVX on the on the front monthly right now is 29% IVX, which is high, but it's not like. Remember when I was doing those naked calls on the VIX way back in the day and making money off of that? It's nowhere near that.
Yeah. Yeah, I mean, the volatility is not quite high enough where you can just be selling strangles on volatility and expect it to print money. But we're getting there. You know, it's slowly ticking up, the volatility. I didn't expect that the decline would get this far into the year, because these things have burned hot and fast over the last couple of years. It looks like we're going into that more of a slow melt off. You know what I'm saying?
That's why I'm big on the server on buying power reduction and managing that, because when we went sub 20 VIX on Wednesday, I was ratcheting down my positions because you want to be able to scale in if we go VIX 30, which we touched today for a short bit of time.
30. All right. So that's up there.
Yeah, I mean 12 is actually the historical average.
12 is the average. All right. So that's high. Yeah, I
Yes,
mean,
I'm at 40% buying power right now.
the rest you're holding in cash.
Yeah, but whenever I'm doing, I mean, I still have at least double nominal value of my portfolio, because Strangle on Tasty Works is only going to cost me 22% of the underlying.
Right, I got it. Okay, and that's still a significant amount of cash. So I think right now I've got like 9,000 left in cash, which is like 1.5% of my portfolio. I think I got assigned on my short put on Coinbase, so I got assigned shares at $320, which is like way higher than I wanted to be assigned. I mean, this thing is just dead money while I'm waiting way into the future when Bitcoin starts rising again. That forced me into pretty much trading in all the cash I had left in order to roll out of that position. It didn't have a huge impact on the amount of money I have, but it definitely forced me into a spot where I don't have as much cash to buy the dip as I had prior.
Yeah, that's actually not. But if you're holding equities like that, you're holding shares of coin. I wouldn't. Then it makes sense that you're above 40% buying power. I mean, I'm mostly naked positions, so.
Yeah. No, I know.
So
I got
I
you.
have to use less. On coin though, I have that in my IRA, so I have 100 shares at a cost basis at 199.
That's a lot better than my cost basis. I mean, geez, I think Coinbase has probably been might be my worst investment ever, as far as like percentage goes. So I was so bullish on it. You know, I thought for sure that the toll booth on the cryptocurrency highway for the common person would be an easy win. That ended up being way off. That's why I was fortunate I only went 5% of my portfolio into it, which is high for me for one spot. But now it's more like 3 or 4% of my whole portfolio has gone down so much.
Well, one, I mean, by not going above 5%, you didn't get yourself into too much trouble.
Yeah.
But we talked on the day of Coinbase IPO, and I said the valuation was just astronomical. And yeah, these companies can grow into those valuations, but at the time it would have made Coinbase the third largest bank in the United States at its IPO price, and that didn't make any sense.
Are you sure about that? I mean, I don't think it was that high, was it? It was that expensive?
It was pretty damn expensive.
I believe you. I remember that the private market, people were trading shares at like $500 plus. So I thought once I saw that, I mean that's people that are looking at they're looking at actual equity in the company. You know, they're talking about much bigger dollar values than I'm investing, than the retailer is going to put in, and they might not be concerned with those short to medium term moves.
Yeah, I mean, IPOs can easily burn you. I got in at the U IPO, that's YOU, and that's down about 40% for me, but it's a surveillance company, and I think in 2020s, anyone in surveillance is going to make bank, whether it be Palantir, Clear, which is the YOU ticker, or anyone in that space.
Why is because I was just at the airport today, actually, and I saw Clear, and I can't, that's for those that don't know, they have another way to check into airports using biometrics instead of actually going through lines and showing your ID. But my problem with it is that all that Clear is saving you is getting you through the first level of security. You still have to go through all your bag, like the regular security for checking bags, your carry-on is getting looked at, all that stuff. So I'm wondering, why does Clear have why are people so excited about the company itself?
Well, I was a Clear customer when they first started in the late 2000s, kind of during the TSA era, when that was starting. And what they do is they allow you to cut in lines, basically, to go to the front of the line and to get kind of VIP service going through. I live near Denver Airport, and I've timed it. I've been able to go through the clear line in about 45 seconds.
Versus,
So,
I mean, you're saving yourself time, yeah, but isn't Clear like a subscription to that very expensive?
It's $129 a year, and if you're a
All right,
business
so it's not,
traveler, now granted, I'm not flying as much to the East Coast for business like I used to, because a lot of corporations have no travel policy. But
Right.
if you, well, I'll give you an example. I mean, I was visiting my family over Christmas, and that helped me not miss a flight. Because I could reliably know that if I get to the airport and 30 minutes before my flight is due to board, that I'm more than good to go. That
Yeah.
I'll never get stuck behind a massive wall.
I mean, when you put it in that context, it makes more sense. Like the business flyer or the very frequent flyer would benefit from taking advantage of it. I think Clear is going to have to make partnerships with all these like business class credit cards and stuff like that. I think they're going to get a lot of value out of that.
They have. I've seen them at the Delta terminal before, pushing that. They also have a lot of football stadiums and basketball stadiums where, for sports fans, they could get in. I think over here where the Broncos play.
That actually makes a lot of sense. Yeah.
Yeah. So what sent them into bankruptcy the first time was the infrastructure cost, because they have to not only build out those terminals, they have to pay a cut over to the TSA or to the stadium and that kind of thing. But now that there was a lulls in travel, they were able to sell it as a service to get people to go back in. And I think they reduced their costs significantly. And biometric costs are nothing now because retina scanners cost almost nothing.
Yeah, it's a lot less expensive than it would have been 10 years ago. That's for sure.
Yeah. So if I'm a huge fan of the company, because if you want to upgrade to business class on a single flight, that's probably $200, $300.
Yeah.
Or first class, $300 to $500. But I could pay $150 a year or less than that and get save a significant amount of time at the airport. So it's a much better deal than first class or business class or even lounges and that kind of thing.
That would be nice if Clear can start putting lounges onto their subscription service. I mean, I thought lounges were just like a more comfortable place to hang out, but they serve food, they serve beer. Airport lounges are a nice way to travel. It's not just better seating.
And if you're doing business travel, it's a godsend, because that means if you're done with your meetings, you could just go there and chill at the lounge rather than have to pay and do reimbursements at restaurants and that kind of
And that. I mean, I'm right there with you. I've got the American Express Platinum because it's free for military people. I think the amount of money that I've actually you don't have to pay anything to get into the airport lounges when you have that card. Normally it would be like $20-something, but when it's you plus one guest and you're getting free sushi and free beer, I mean, now we're talking about real added value for those frequent flyers.
Yeah, what's your strategy on your coin position? Are you just keeping the shares naked?
So I had 100 shares when I IPO'd. I just bought it immediately. I thought for sure it was going higher. It was like $700 was my price target. At the end of December, I was like, all right, I guess it's time to sell these positions, sell the shares, get the tax deduction from it. It'll save me a few $1,000s in taxes. So I sold the shares, but I didn't want to give up my high delta position. So I then sold I sold a naked put actually, with the same cost basis that I had on the shares.
Gotcha.
So according to some people, that's a wash sale, but according to like the actual letter of the law, there's really nowhere that says that that's actually a wash sale. So I'm just going to report it as a new position, be able to sustain the tax loss from selling the shares at a big loss, but still keep basically my 97% or 97 delta short put, essentially the same thing as shares. But what I'm doing now is I'm just rolling it out as I can, trying to take a couple $100s a month while selling the covered call at the same strike. So I've got a what would that be? I got a in the money straddle basically, trying to carve back some of those losses while I wait for the stock to increase. I still think Coinbase is going to be a successful company. I mean, it's making money hand over fist, but it's not going to see those big gains in stock price until Bitcoin starts resurging.
Right. the nice part about the business model, though, is it's not going to be directly correlated with the Bitcoin's price. It's going to
Right.
be with trading volume.
Yeah.
So if Bitcoin crabs for the next couple of years, they'll be making bank. But there's increased competition. I mean, there's going to be 2 Super Bowl ads for crypto exchanges.
Oh, I have no doubt. But when people are going, in general, I think when people are getting into crypto for the first time, they're not going to Kraken. They're not going to the KuCoin.
KuCoin, yeah.
I mean, they're not really going. I mean, people are generally, I think, going to Coinbase to get their foot in the door. And I'll tell you, there's no exchange that I trust more to actually hold my crypto than Coinbase.
I agree. I wouldn't keep an extra money on KuCoin, which who knows where they're headquartered. They say Singapore. They say some people say China.
Right.
Nobody knows because it's an empty office.
Yeah.
Coinbase does have that security, and normies use it. Like,
Yeah.
I even walked someone through at work on how to set up an account in Kraken for it, and then he sets it up on Coinbase. So I'm like,
There you
I
go.
gotta own shares of the company because
Right.
everyone's just foolishly spending money there.
Yeah, that's I mean, Coinbase is where people go when they want to start trading crypto. They're the most secure, they're a reliable company, and just like you said, they're not making money based on Bitcoin's price. They're making money based on the trading volume. So even when cryptocurrency is going sideways, or even when it's going down, people are still trading, and Coinbase is still making money off of it. But I don't think Wall Street really knows what to do with that, and Coinbase doesn't get as many new users when crypto is going down or sideways as it does when crypto is going up. So when we go in, when Bitcoin is mooning, they're getting more users onto the platform. I think that's what Wall Street really cares about, because it's got to grow into that valuation, and it's not going to do that if crypto is just going sideways.
I view Coinbase as the Levi Strauss of crypto, in which there's going to be a lot of gold miners. You have Mara and that kind of thing.
Yeah.
But Coinbase is going to constantly sell blue jeans and make the most money in the end.
Yeah, I mean that's why I'm long it. But then clearly the market doesn't really agree with my evaluation of Coinbase, because the thing's just taking a hit day after day. It's pretty ugly. I think what do you think of their NFT platform? Do you think that's going to do anything for their income?
I don't know. I mean, I'm going to a conference that has a lot of NFT aspects to it next week, the Ethereum Denver one. I'm still kind of learning the space. I'm more invested in the stuff that powers that rather than the NFTs themselves. But right now, there really isn't a good exchange wallet system for it. So if they can have a unique value proposition, because right now, there's nothing Coinbase does that other exchanges don't do for you. So them getting a nice advantage in that would, I like it, honestly.
Yeah. I mean, I'm not supposed to tell you guys about this because I signed a non-disclosure agreement, but one of the user interviews focus groups that I did was actually with Coinbase, and they wanted feedback on how they can make a successful NFT platform. So when I, did my sign up to the user interviews, and I said, I am actually a NFT, I focus on NFTs a little bit, and I use Coinbase. They were ready to get me on board with, their focus group. And I think it looks like what they want to do, and this was actually something I suggested to them, is when somebody makes a transaction in cryptocurrency, you can provide NFTs as a sort of receipt for that transaction. And that way you're getting something in exchange that, you have it now on a second blockchain that a transaction took place and somebody's receiving a unique NFT as a receipt for that. Because right now, I don't think anybody really knows what to do with NFTs. They have a lot of potential, but they're full of scams. There's a lot of companies promising that they're going to do something with an NFT. Like, buy my NFT, we're going to make a unique club that you can get into as long as you own one of them. But all those promises fall apart as soon as the NFTs get sold. So I think it's going to take a big player like Coinbase to actually turn that whole industry into something worthwhile.
There's one disadvantage Coinbase has in the NFT marketplace compared to someone like Binance, is that they don't have their own smart chain, which they would get free gas on.
Oh, that's a good point.
Yeah, Binance has BSC, which I use for some of my shit coins, and Coinbase doesn't really have their own exchange. In fact, I mean, they don't even permit anything on the Binance smart chain there because they see it as competition.
No, I hadn't thought about that before. The gas fees would be detrimental if they're using, especially the Ethereum blockchain.
Oh yeah, they can afford it now. Granted,
yeah, it would make sense.
if they were to use something like Moonbeam or even Solana, then or what they could do is similar to how their hot wallets work. It wouldn't go on the blockchain that a transaction happened unless you withdrew it.
Okay, so everything would just basically be held inside Coinbase's own servers until
Let's say you were to buy $1,000 in Bitcoin today on Coinbase. That transaction doesn't go on the blockchain. They basically have an IOU in your account for $1,000 in Bitcoin.
Well, yeah, that's why they can do it so quickly. Yeah.
Right. And so they can do it for free. It's only when you withdraw from their liquidity pool do you actually get $1,000 in Bitcoin.
Yeah, I mean that's why you can immediately buy and sell on Coinbase Pro, because you're not actually trading on the blockchain. You're just trading within Coinbase's own their own server. Yeah, their database. Yeah, and then once you actually move it, I think that's when it goes on the blockchain, like you're describing.
Yeah, I'm not sure what the practical use for the blockchain is with regards to NFTs. Even when you're dealing with stuff like logistics and supply chain, that doesn't need to be a non-fungible token. Maybe there's some value in it from having deeds of property, deeds of things, and right now they're doing it for art, but deeds of art on there, as it gives not only ownership, but it gives transparency into who has it.
Right. But, I mean, think about this though. Like, I don't think our property laws actually respect blockchain's ownership. Like, if Taylor Swift writes her own a cappella and sings it, and she's like, you know what, I'm going to NFT this MP3 file and sell it to somebody, she could probably make a shit ton of money. But I don't think that person who buys the NFT'd MP3 file actually owns rights to the music. Like, legally, I don't think they own anything.
I know the people who actually run the big music union in Los Angeles, and it's very clear that none of those NFTs have any form of ownership or royalties. Now, granted, you can sign a royalty agreement on that, and oftentimes the royalty agreement is just on the NFT itself. And remember that the music file or the image is not on the NFT. It's simply just a URL to the asset.
Yeah.
So you're basically owning copyright on a derivative, not even on the original material.
So you've really gotten nowhere by doing it. Like, I think if Taylor Swift were to do that, she could then go and sell rights to that music to another party, irrespective of whatever she just did with that NFT.
Yeah, because I've dealt with royalties before and licenses agreements, and with music, there's a composition credit, there's a performer credit, there's a whole system, and you have to go through ASCAP and some of these places. It's pretty complex, and the NFT marketplace right now is not mature enough to handle rights disputes in that space.
So even if somebody did try to make a big deal out of it and sue and make a lawsuit, it would probably come down to them owning rights to that particular link that got them to the MP3 file. I mean, that's what I think.
A lot of this reminds me of in the late 90s when tech companies were starting to become really big during the tech bubble, where there was a lot of interesting tech, but it didn't have a practical purpose. Most of those companies went under, but the survivors, those became companies like Amazon and Google. So the really big players, I think what's going to happen is we're going to have a washout of 95% of this become valueless, but they'll figure out something of value for it, because fungibility in tokens is, a lot of people don't really understand it, because we call these non-fungible tokens, but outside of Monero, very little coins are fungible in a sense, because you could blacklist them. That's what happened with the Bitcoin seizure recently. So they are distinct in a way. I'm struggling though to find the value in a lot of these NFTs things. But to be fair, the number one crypto holding I have empowers a lot of NFT stuff on
what, Solana or Moonbeam? Yeah. What about Polkadot?
I'm big into that because I go into every Polkadot project and lend to that, and so some of these coins you get rewards, and that one just shot through the roof. So
Yeah. Okay.
Been very. It was my first like 100x in crypto was on there.
Yeah, I have yet to experience a 100x. I think I had a 10x on crypto. I think it was, what is it? Not Cosmos. It was Ripple. I think Ripple, I like 10x'd. My total investment was like $200. It was back in like the big boom of like the 2018 shitcoin bubble.
Before it got hammered with legislation and all that.
Yeah, I mean, I don't even know what happened to it. I think I ended up selling it for like a couple thousand, and I felt like a king for a little while. But I haven't really had success speculating with crypto. I bought Floki Inu at like, 5 days before the top. So I had made money in the very short term, but I didn't sell because I was buying into this is going to compete with Dogecoin, which that ended up being a complete lie. I just haven't, I think like my approach to crypto is going to be take the ones that are paying interest and stake those.
Well, that's what my crypto fund that I'm creating over the next few months is going to do. It focuses purely on staking because the yields of some of these tokens are pretty significant right now. For instance, Polkadot Kusama has a 7% inflation, but you could get 18% staking because so much of Kusama is locked up on the parachains. With staking, unlike mining, there's a lot less computational toll on it. You could often delegate, so you don't even have to run a computer. And if you find opportunity, it's not about what like the net APR is on a stake.
Yeah.
You have to look because, for example, like Solana's doing 6% right now, right?
Okay.
5.5%.
That's good.
It inflates at 5%, so you're not really gaining any progress. You have to find opportunities where the inflation is significantly less than staking, and that happens when only a small percentage of the coins are being staked because they get 100% of the staking rewards.
Well, what about like the stable coins that are all paying like 11%?
So that's interesting. That's not staking. That's lending and rehypothecating. So
what those words mean.
Deposit funds at the bank, due to fractional reserve laws, they are able to loan it out at a rate of 400 to 500% of the funds received.
Yeah.
So
Right.
Now, that's basically how stable coins work, in which if I give a company like Celsius $10,000 in USD coin, they can leverage that into 30 to 50,000, sometimes even 100,000 in various liquidity pools. They can make maybe 15 to 20%, and that's how they pay the 10% out to customers.
Right.
So
Okay.
there's no staking because those coins themselves are not stakeable. They're centrally controlled and are only minted by the contract owner itself, which is going to be Tether, USD Coin, which is, I believe, Circle, or some other companies. So there's a terminology confusion between staking and lending that a lot of people get when they say, well, I could earn 8% staking Dogecoin. But you can't really, if I'm not mistaken, Dogecoin is not even a stakeable currency, stakeable token.
I've never heard of that. I mean, there's probably pairs that you can like farm Dogecoin paired with something else. I don't know if that's the same.
Pools, or it could be just used as an asset to back up other assets in rehypothecation. So that's where the money is being made, not because you're necessarily staking it. Someone's mentioned KCS. Yeah, KuCoin has a pretty good yield because those tokens are not even inflationary. They have a deflationary pressure from Bitcoin burning. I believe 50% of inbound KCS tokens that are used as fees on their exchange server. So the KCS token is great for that. But exchange tokens tend to die off a cliff at times. Like Celsius lost 90% of its value because people ultimately decided, wait, this is a token that is only used at one place that doesn't really have any value or any equity tied into it. It's like going to Disneyland and buying Disney bucks. They have a use, and you could get them at a discount, but they're not good anywhere else, which will hurt their long-term value.
Now, that's kind of the same reason that I got out of my position holding, what is it, like Crypto.com's token.
Yeah, you have the Crow token.
Crow, yeah. It didn't do anything. The only reason to hold it would be if you hold a certain amount, then you get a higher reward for staking or holding other tokens in Voyager. Or Crow and Voyager, same thing.
It doesn't even have any equity attached.
Yeah. That's all it is. So you're basically speculating that the company is going to stay liquid long enough to continue making its payouts. But there's no, I didn't feel like I was getting anything other than Chuck E. Cheese tokens.
Yeah, and at least Chuck E. Cheese, you can take it to play some
You can play games, yeah. The only reason to invest $5,000 into Crow or the Voyager token would be so that you could get higher rewards on other tokens. But that's I feel like that's a cheap way for the company or the exchange itself to get people to buy their own coin. That doesn't really have any intrinsic value.
Right. When I stake on Polkadot, what I'm essentially doing is I'm getting value on all chains that are attached to Polkadot as they need Polkadot in order to secure their next lease period. It's basically digital oil similar to Ethereum. There is an intrinsic value to it as long as the hash rate for Polkadot has value. With Celsius token, Crow token, there isn't. Now Binance is a little different with the BNB because that's ultimately similar to Ethereum, in which that's going to be the gas fees for any Binance smart contract. So there is value on that one.
Yeah.
But Celsius and Crow, I think that's the right idea to stay away. If they want to give me rewards in that token, that's fine, but I'm not going to put any capital directly in that token itself.
Yeah, after taking a 50% loss on the Voyager token, I just said forget it. Coins like that depend on having a strong bull market.
Right now.
What's that?
What are your crypto holdings right now?
What do I have?
What do you?
So I've got I don't know, maybe 5 Ethereum. I've got 5 ETH, 5 Litecoins. All the Litecoins have actually earned off of freeloading, so free cash, mostly the big one for that. And so that's kind of just a fun way to build a position out of it. But Ethereum is my biggest one. I've got 5 of those. My goal for Bitcoin is to reach 1 Bitcoin by the end of the year. And as soon as I hit my dividend goal, I'm going to start investing in that one. But I think Ethereum is the biggest. Chainlink is another one that's pretty large for me. I don't know how many I actually have. But I don't have a super diverse portfolio in it. It's mostly all in the the big blue chip type cryptos.
Right. And Ethereum, are you still doing that where you're selling covered calls on them?
Yeah, it's gone down so much that to sell covered calls at my basis would be I'd get dollars at a time. But for a little while, I was wheeling the $4,000 and $5,000 strikes on Ethereum on Ledger X. That's something I want to go back to, especially once I start adding my Bitcoin position. I want to wheel it on Ledger X because the premiums on that thing are tremendously high. You can't do complex strategies on it. It only recognizes covered calls, so you're talking about level 1 and level 2 options. Not even level 2. It's just the cash secured puts and the covered calls. I think cash secured puts is actually level 2, but you can only do those strategies. So it's not like I'm going to be selling straddles on Bitcoin, but the premiums are so high that if you have 3 Bitcoin, you can sell the $100,000 strike for enough money to almost buy another Bitcoin. It's tremendous value there.
Yeah, that's what I'm interested in because a place like Lithium or Celsius is going to give me about 6% to 8% on my Ethereum and Bitcoin. And now there's no risk of losing the underlying. That's a free 6 or 8%.
Right.
But at the same time, if I'm able to generate 15, 20% because the IV is so high on Voyager and that kind of thing, I should move my stuff out.
Yeah, Ledger X is where I do it. I think there's other exchanges that will even allow more complicated strategies. But if you're talking about you want to sell covered calls at 60% out of the money, the place I do it on is Ledger X. And right now, if we start getting into the a bull market for crypto again, those premiums are going to get very, very high again. Right now, they're a little bit low on the call side, but if you want to just hold and wheel in there, the returns are tremendous. I think that's going to be the bulk of my freeloader challenge returns is dumping money into Ledger X and then wheeling it there.
The staking rewards of early coins or early tokens on the parachain are astronomical. Now, I think with Moonbeam, it was starting off at 300%. It's calmed down to about 70%. It will settle probably to 15 to 20% in a year. But the reason why is that the coin has something like 5% inflation, but only I want to say 10% of this of the max supply is circulating, so 90% of it's locked. So those 10% of that, only 40% are staking. So that now you have 4% of the total supply getting getting 5% of the coin's total inflation. So that puts you north of 100% in terms of APR. So as long as the coin doesn't have in value over a 270-day period, you're profiting.
Okay, I understood most of what you just said. So
Well, I'm working on a PowerPoint for it because it's a business model.
Yeah, you were talking about that yesterday, man. When you're ready to launch, sign me up. I need an adult. Like, I'm waiting for a ETF or mutual fund that just invests crypto for me, because I suck at it historically.
There's already DAOs that do that on the blockchain outside of ETFs that do like crypto ETFs. The DAOs that do that, like I believe it's called Index Co-op. What they'll do is they'll have 12 or 15 particular holdings, and they will rebalance on a quarterly basis. And they'll have a fund fee of about 1%, which is pretty competitive with what the ETFs in that space do. But essentially, you're just paying someone to be your custodian, and they're able to rehypothecate the funds. So it's very profitable for them to run it, and it's not the most efficient for you. The economies of scale really open up when you run one of these funds, because it costs me the same amount to send $1 million in Bitcoin than it does $100.
Yeah.
So the mining fees are, there's an economy of scale based off of how much capital you have. But two, unlike mining and staking is this is actually similar. Staking is becoming more of a whales game, in which there are limited staking opportunities on each of these coins and tokens, and the validator nodes get not only the full rewards, they get a commission from everyone who nominates them to run the delegator node.
Yeah, they get their cut.
The node that I'm on at CertHum, they have, I believe, 500,000 Glimmer tokens on there, generating 120% APR. They get a 20% commission on the staking rewards. So
okay, that's really high. That's like an affiliate commission for a salesman.
Right, because unlike Polkadot or Ethereum, you need to highly incentivize the people who will run the blockchain at the beginning, because they have to go through your manuals, they have to learn everything, they have to get it up and running. There's no liquidity in the market. There's quite a bit of risk for the nominators. So if you're running a fund and you're running the nodes themselves, you could provide a larger return for clients than what they could do if they were to simply just do nominations themselves. So unlike that index co-op ETF, where you could simply buy 14 cryptos in a Binance wallet, hold them, and not pay the 1% fee they're doing, it would probably cost you 0.1% to do that. But it makes it easier where they'll do the rebalancing for you. On the staking side, if there was a Vanguard or a company that ran these stakings, as opposed to, right now it's just Binance and KuCoin and a few others that do it, you could provide a higher yield than just the staking rewards in general for the average user.
Yeah, that works for me. You said that like investing that way isn't the most efficient for you as the investor, but I'll tell you what's less efficient than that is trading like shit in crypto, which is what I do, and not having time to really do a full investigation into all the options out there. So I will gladly give somebody 1% fee to manage my crypto for me when it comes to my speculative investments, because I've had no success with that. And I honestly have other things I want to do that I'm not going to be able to really learn this myself. So if there's a fund out there that wants a 1% or 2% fee in order to do it, by all means take it, because I trust them a lot more than I trust myself to invest that way.
Well, on the blockchain, you could check out Index Co-op. They're already running a few. So you could do that, and then hopefully I'll go to market in Q3, Q4 this year.
Yeah, I mean, these all sound like relatively unregulated things or pretty immature in its regulation. So I trust Mr. IV as my custodian a lot more than I trust some other unregulated company out there. Because at least I have your phone number.
That's the other worry is that, that there's going to be bug holes on these because while they do, in a DAO, while there's a democracy of that in terms of votes, that's subject to a 51% attack in a way where they could just
absolutely
take everyone's not like steal the money, but they could poison it so that only they really benefit.
Yeah, I mean, why not? You could rug it if you want to. Like Mirror Protocol, when I was looking at Mirror Protocol for that the last video I made, if 51% says we're going to raid our liquidity pool, they could do it.
Yeah.
And a couple of whales is all it takes.
Regarding your more options plays and stock plays, are you ramping up now that the VIX has climbed and increasing your positions?
I will once I'm finished with my taxes, because I don't know how much money I'm going to owe, and I don't want to wind up in a spot where I actually have to sell stocks at the lows in order to pay my taxes. So right now I'm hoarding cash on the way down. Once I'm done with the taxes and I've got that all settled, I'm going to start probably adding new positions for strangles. Because I loved the strangles so much when the market was kind of flat. For months and months and months, I was just selling strangles, take my profit at like 50%, buy shares with it. I mean, it was working out perfectly. But with a big dump like this, the strangles kind of get blown out and I suck at managing them. Well, I suck at managing them in terms of knowing when to take losses and actually doing it. So I've dug myself into a hole. But I want to add new positions in things other than Triple Q to start strangling again. I might just start strangling SPY.
What I have learned over the last year is that managing losses early, I don't think adds to the P&L or really improves portfolio volatility. I used to be of the opinion that once you're at 200 or 300%, that you should exit a loss, exit the position.
Well, that's Tasty Trade's evaluation.
That what used to be Tasty Trade's valuation, but then they did another study on it where they looked at daily P&L on strangles, where you take three different strategies. One, close at 50% profitability.
Okay.
Two, roll out at 21 days to expiration, and three is manage at minus 200%.
Yeah.
And what they found out was every time a strategy you added the minus 200% to it, it underperformed. The best strategy in terms of both performance and volatility was combining 50% take profits and 21 DTE rollout.
So what do they recommend when you start getting, like I got destroyed when Triple Q is dropping from 390 to, what is it at now, like 340 something? Let me
check right now.
So now that it's been hammered so hard, I'm deep in the hole on my short put. My short calls, I have inverted strangles open. I'm probably just going to sustain that for a little while. So I'm making money on the call side, and I'm just rolling the put side indefinitely so I don't end up getting assigned. But this is...
What's your position right now in QQQ? I'll pull it up on my console.
Shares, I have like 500, and then the calls and puts, I'm short 6 puts at 390, and I'm short 6 calls at 375.
Okay, and it's so 375, 390. Is that on the March 18th?
No, that's February 18th. I need to roll these out, but I have
7 days to expiration.
I
There's
have
no
7
left.
Yeah, there's really not much left on it, so I need to just roll them out another 45 days. But
and that's not. Let's see. That's what 15 points of inversion you have.
Yeah, I mean it's a lot. This is kind of my experiment with inverted strangles because I've never done an inverted before. Usually when I wind up on fourth down like that, I just roll both legs out into a new straddle. But now I've gone inverted because I was taking on a bearish skew to it. And I'm starting to wonder, why am I even bothering to do that? Like if I'm bearish enough that I'm willing to go 15 points inverted, why am I even holding that 390 short put? You know, it's like I'm trying to run 2 separate positions at one time. Avoid getting assigned on my 390 short put and sell 375 covered calls. That's really what the position feels like rather than an inverted straddle. or inverted strangle.
Right. The extrinsic on these is less than of a straddle because your moneyness is way off. The 390 call is that extrinsic isn't going to be worth much of anything. Right?
Yeah, I mean, there's nothing left. I'm up like 97% on the short call, and I'm down, I don't even know how much on the short put. I mean, the reason I held this long is because I was banking on another Wednesday. I think was it a Wednesday when the market went up like 3%.
Oh, yeah.
Like I'm so directionally biased now with these short puts that I'm not really going to get anywhere on selling extrinsic value. I basically have an extra 600 shares of triple Q by holding that short put at 390.
And you said you had 500 shares?
Yeah.
What is the cost basis of that?
Like they're in the 200s. They're good. They're fine. I'm not worried about them at all.
Oh, okay. Then why don't you could do a covered straddle on this where you go out to say I'm looking at the expiration of the QQ. The April 14th is going to be 60 days on Monday, and a straddle on that is going to get you about $33, which is 8% of the underlying at 347.
So what strike price are you looking at?
I'm looking at 347, which is the money strike on the April 14th.
Yeah, to liquidate and roll that way.
$4 on that.
Yeah, like, I mean, I look at that sometimes. I'm like, maybe I should just cut my losses on this 390 and start running a more at the money type position. But God,
it
would
definitely close the current inverted strangle.
I don't know. It's like probably $14,000. I don't know. I think it's something like that. I mean, it's a lot. I'd have to actually check my account to see how much money I've gained and lost. But the 390 short puts, I sold those for like, I don't know, $10 each, maybe, probably even a little bit less than that. And now they're worth like 40. Yeah, it's like 40 and change. I mean, there's not a lot of extrinsic left on those either. They're so deep in the money. So I'm only gaining, a few dollars at a time by rolling out 45 days at a time. Really, all the gain I'm getting right now is coming from the short calls. And then the time value on the short puts it's just a little bit. I have a directionally biased position now.
Do you shares in long-term capital gains at this point?
Yeah, they definitely are. But I'm married to them at this point,
Well, you could sell 100 of them to kind of pay out the debit on the short puts, and then open up the at the money straddle that is covered for April and gain about 12,000, 13,000 on that position.
Yeah,
and it'll require management because it's a straddle, but you're covered at least on the call side.
Yeah, I mean, that's probably the responsible thing to do here is to don't get married to seeing that large green in the portfolio that makes me happy when the market's going down because I'm still up significantly. The idea would be pay your taxes on that 100 share position, get some more liquidity back, and then it should be fairly easy to dig out, to get that tax value back by just selling closer to the money strikes. I mean, the tax on it's only going to be like $3,000 or less than that.
Yeah, it's nearly impossible to maintain a green position on QQQ or an index for years and years where you're just chipping away free money. There's going to be corrections like this, and that's when you want to be able to resize the position, reorient the deltas, because right now you still have a ridiculous delta on QQQ, so you don't need, if you just sell 100 shares of it to cover some of these losses, you could still have a high delta and a high theta.
I mean, my delta on it is probably like 1,100 right now. We're pretty darn close to it. 1,000. And between the shares and the and don't forget, I've got a bunch of triple Q as well. So I keep a lot of that naked. So if triple Q goes up, I'm not going to lose money. You know what I'm saying? All right. I think we're kind of getting down to the wire here. Becky's not giving me. Yeah, we gotta wrap. We gotta wrap up here. All right, shh. You want this? Here, just hang out with this for a second. All right, yeah, I gotta wrap it up here because the mess that she's made is tremendous, and her cooperation is wearing down.
On the screen. Take care.
Yep, this is a good chat. Thanks everybody for joining the stream. See you guys next time.